The S&P's thin little buffer zone just got a whole lot less thin. The Nasdaq's fresh bear flip took one look at the calendar and rallied anyway. Semiconductors just did the thing nobody saw coming. They became the problem child. Tesla, Amazon, Nebius, everybody's still arguing with themselves about which direction is real. This is Panic Sell Weekly. Good evening, everyone, and welcome back to Panic Sell Weekly, where we cut through the noise so you don't have to panic sell anything. I'm Phil McCandlestick, and folks, this was a week where the story from 7 days ago basically flipped its wardrobe. The stuff that was thin got thick, the stuff that was strong got weak, and two of our recurring names are still out here having an identity crisis on two different time frames at once. Let's get into the big picture first, then we'll go stock by stock. Let's start with the S&P 500. Up about 1% this week, closing at 7,489. Chasawad Team RTR. And remember last week we called the cushion above the point of control thin, sitting at around $32, and said one more red week would put that level directly in play? Well, the market heard us and did the opposite. That cushion is now $170. The bull flip from 16 bars back is still holding. All M as aligned has now joined strong trend in full bull confirmation. That's an upgrade from last week. You offer wide. And RSI ticked just above 60, so we've got a small overbought flag, but nothing that outweighs a market that just tripled its own margin for error in a single week. There is one thing worth flagging though. Bottom catch ready was sitting in its qualifying zone last week at a K value of 57.2. This week it's climbed to 72.8, out of the zone entirely. That mechanical setup we said was worth watching has aged out. Nothing wrong with that, just noting it for the record. Now here's where it gets genuinely interesting. Last week, the Nasdaq printed a fresh bear flip, and we called it a knife's edge. A $34 gap to the point of control. One bad week from a clean breakdown. This week, the index went up 1.6%. The bear flip is still technically active, now aging to 1 bar ago. Trend state still reads downtrend, but that knife's edge gap has widened to over $900. That is not what a market on the verge of a breakdown usually does. And here's the real headline from this chart. A fresh bottom catch signal fired directly on this bar on the bull side, while the bear flip is still technically in force. We've seen this pattern show up more than once this cycle. A bearish trend label with a genuine bullish trigger firing underneath it. And it's exactly the kind of tension worth naming instead of picking a side on. Strong trend, for what it's worth, never budged. It said bull last week during the flip, and it says bull now. And now the plot twist. Last week, semiconductors were the one thing holding the entire tape together while the Nasdaq cracked, up 1.25%, looking like the adult in the room. This week, the adult wandered off. SOX is down 4.3%, the only red print among our three indices tonight. FunSim is broken below its own moving average for the first time in this stretch. A real crack, not a rounding error. Our money flow reading actually came back as unavailable this week, which happens sometimes with this data feed, so we're not going to pretend we know something we don't there. Bottom catch ready is still technically in its zone, same as last week, though the K value dropped from 56.5 to 41.4, moving through the zone, not sitting still in it. Strong trend is still bull unbroken. But make no mistake, the group that was propping up the whole market last week is now the one thing dragging on it. If you're the kind of person who likes irony with your technical analysis, there it is. Sticking with chips, Advanced Micro Devices had itself a week. After bouncing 5.25% the update before, AMD gave almost all of it back, down 8.75%. All M as aligned, which had just clawed its way back to full bull confirmation, rolled right back to neutral. The second time that exact whiplash has happened on this name in 3 updates. If you're keeping score, that's not a trend, that's a pattern. But here's the one reading that refused to participate in the chaos, money flow. CMF kept climbing through the entire decline, up, not down, while the stock fell almost 9%. That is the kind of quiet, boring, unglamorous divergence that actually matters more than the headline number. The trend hasn't broken. It's just having a very loud argument with itself. Micron's story this week is simpler and frankly a little more concerning. We flagged 2 updates ago that FunSim kept falling no matter what price did. This week makes it 3 straight declines in that reading, through a rally, and now through a drop. That is officially a pattern, not noise. On top of that, the volume-based reading that had just reclaimed its moving average, the one positive we specifically called out last time, gave that reclaim right back up in a single week. The one genuine bright spot, bottom catch, ready flipped into its qualifying zone for the first time in this entire stretch of coverage. Real signal worth watching. Just don't let it distract you from the fact that institutional conviction on this name has now had 3 bad weeks running, regardless of what the candle color says. Let's bring in a name we're covering fresh this cycle. Nebius currently has the single most confused confirmation board of anything we're looking at tonight, tied at the very bottom of our conviction scale on both the bull and the bear side. The trend label says downtrend. Meanwhile, trading volume says bull, the long-term trend structure says bull, and a real, if modest, buy zone signal just fired directly against the bearish label. This is a coin flip chart wearing a bear costume. Now zoom out to the monthly, and the plot doesn't so much thicken as it just gets weirder. This name just had its worst month in the entire cycle, down 31%, and the monthly trend signal is still technically an uptrend with full bullish alignment on the moving averages. Here's the thing though, that monthly reading simply hasn't caught up to what the weekly chart already told you. The weekly already flipped bearish. The monthly is still living in last month's timeline. When your 2 time frames disagree this loudly on the same stock, the answer isn't to average them together. It's to go check which one is actually driving the bus right now, and right now, that's the weekly. Last but never least, Tesla, our resident soap opera. A week ago, we described a $52 cushion sitting below a fresh flip and warned about treating any single reading here as settled. Since then, this stock has done exactly what Tesla does, which is refuse to sit still. The structural picture underneath the trend has shifted meaningfully. Strong Trend and Fund Sim both moved from leaning one way despite the noise to actually confirming the direction the trend label already claimed. That's the difference between a flip that's just a candle color and a flip that's actually earned some backup. And zoomed out to the monthly, the story rhymes with everything else we covered tonight. A fresh flip arriving with real structural weight behind it. But also a genuine buy zone signal firing on the exact same bar, sitting there in direct tension with the trend label. We said it before and we'll say it again, a flip this fresh, sitting on top of this much still intact opposing evidence deserves real caution before you treat it as gospel. So here's the week in one breath. The S&P's cushion tripled, the Nasdaq rallied straight through its own bear flip, and semiconductors, last week's hero, turned into this week's villain. AMD and Micron are both fighting internal battles between their price action and their underlying conviction readings. Nebius can't decide what decade it's in depending on which chart you look at. And Tesla, predictably, remains Tesla. If you want the full breakdown on any of these, the exact numbers, the stop levels, the entry conditions we're watching, that's all up on the site, panicsellweekly.com, links in the description. Congressional Trades Trackers live too if you want to see what Washington's been buying and selling. Hit subscribe if this was useful, and I will see you next week. Until then, don't panic and don't sell just because the headline told you to.